Hey, what's going on, Sun Nation? Good evening to you all. Hopefully, everybody had a wonderful day in this market. What a crazy day it was. Coming at you with a market recap. This is for educational purposes, not financial advice. Wanted to show you what the market did based on how I analyzed it. And for those that are in the nation, you may see things similarly. And those that are not or new, you may already see some of the stuff that we're going to talk about in this video. We're going to make it quick, dirty, and easy. So, what you're seeing is SPY on the 5 minute time frame for today's actions. You can see a lot of data in the charts, but let's just kind of quickly go to my Twitter and show you what I present to everybody on a daily basis. Excuse me. So every morning that you guys unlock my brain, I give you guys my thoughts going to the market. You can see I said, SPY futures up from last night, closed, nothing unexpected. Debt ceiling was passed. Therefore, we're not going to expect any kind of crazy sell off like 30-40% off the S&P 500 like people were predicting, right? Doesn't mean that we're not going to have a small intraday sell off or not, but in the grand scheme of things, that passage of the debt ceiling was positive news. Today was also the 1st of June, so therefore we have new levels for the monthly time frame candle. And then I also gave you jobs data came in lower. And then I gave you the combo for today. I said it was going to be a 222. For today's setup, I gave you what the long entry was, 419.22, and what the short entry could have been, 416.22, and where you possibly could have used a stop if you went either direction, right? We are still in that smaller rising wedge that we've been drawing out for the last, pretty much since March. You can see it, right? Here's smaller rising wedge. We broke out of it, I think, on the 23rd or 24th of May, and then we came back in, and then yesterday we, kind of tested it, the channel. So we're expecting today to either potentially come back down and then bounce off it and come up. That's kind of what we were expecting, basically, because it's coming close. Again, you can see all the levels here as well. And we talked about econ data as well. So you get all this every single day from me. I like to provide you all with a little bit more context than what other people are showing you in terms of here is calls above this, puts below this, etc. Right? I like to give you guys and girls a more holistic view because I think that's what makes you a well-rounded trader. And most of the traders that you follow on Twitter probably are looking the same thing. They're just not sharing that information with you for one reason or another. And I also gave you guys a heads up. So it says still more econ data is come out at 10, 11 a.m. and 1 p.m. US Eastern time. Here are the pivots I give you guys. This is what you guys and girls all like. These are my pivot levels that I come up with. You're not going to find it on an indicator. And again, it's not something that I can easily just tell you how I calculate it. It's a long story. And for now, if you're following me, you get the benefit of that. And then I told you what I'm expecting, right? I said watch for the bears to push down to 417.7. The pivot zone will determine where it goes today. And I said bears want to hold that, bulls want to hold that line and regain 420 and then possibly 425 into Friday. And I told you, my targets are marked off. I said, look, first move is by the push down, pre-market counts, right? Second move will be the reversal up. So I already told you that. First move I'm expecting is down and then up. And then if you go to the next tweet, this is literally before, like 9/11, right? You guys have plenty of time to look at this, right? I drew out what I had envisioned price doing, right? This was the intraday pivot, one of them. If we broke below that, would come, and this was the next pivot was where I was looking at for it to take its bounce, and then once it did, it was gonna come up. So now let's look at SPY's chart on the 5 minute. So this is today's 5 minute chart. You have the downside pivots, the intraday pivots, and then you have the top side pivot, and you also had this gap that was created the other day right here. You can see the gaps right here. So we mark those off because once it gets in here, you can see that once it got in here, it didn't just go straight through. It had a little bit of consolidation, push back, and whatnot. But anyway, look, these are the lines from wedge, right? So we drew the rising wedge. So that's what these lines are for. They all have relevancy, right? So I leave them on my charts so that when we're on a smaller time frame, we can see what they are going to do to the equity. So with that said, we already expected a move down, right? Or at least I did. That's what I was telling you. I was expecting a move down. Look, we broke through this one upward trend line. We broke through it, came back, we tested it, just kept coming down. And then eventually we were sitting in the intraday pivot zone. And right at open, this is a 5-minute candle. We zoom in. You can see that, excuse me, we came down, came back up, failed to break through it again. Next, this is 9:25, 9:30 open. We tended to go up. We could not break through the clouds, nor could we break through intraday pivot. So it came down, and that would have been your confirmation right here to get in, because we're looking for that, right? Even if you didn't get in on this candle, you wait for the pullback. It broke out, wait for the pullback, and then you could have got in on 940, right? 940, you could have rolled down from, let's see, that would have been 89 cents move, right? And that's still huge, right? That's still a good 30, 40% on your premiums and whatnot. Even if you didn't catch this whole entire move, and this is on a 5-minute time frame, let's just say we go to a 3-minute time frame. 3-minute, we had, a massive, for some of you likes to scalp, you could have just done this on the 1-minute time frame, right? So 1-minute time frame, you can see it. 1 minute came up, failed. This would have been your you could have gone in on the 931. Most people don't. Then, you wait for this 932, right? Obviously, if you would have got in, some of you may have been scared out because it came back up. But look, as long as it didn't break above back into the pivot, then you're good. And also, look, broke through this downward trend line, right? So, or upward trend line. So that would have been your play right there to go short on that aspect of it. And let's go back. Again, we're going to talk about this upward trend line. We already broke through one, failed to come back. Here's the other upward trend line we drew, right? We broke through it, broke through a pivot. So that was double confirmation or triple confirmation. Clouds are bullish or bearish. Broke through the pivot zone, broke through the wedge, came back, tested, failed to go back in and came back down. That would have been it, right? And you can see the line I drew pretty much came, to it, right? This line's at 416.98. This came down to 416.79. So what? 19 cents difference. I don't know who else comes with that level of margin of error, but pretty damn good. We knew we wanted to get out here, somewhere around here, because we hit the downside pivot and we're running to exhaustion here. You can see that, price started to make an indecision, right? These are dojis and spinning tops right here. That just means that there's indecision. Price could be changing. We're also overextended in the clouds on the 5 minutes, right? Even if we go on 10 minutes, even more overextended. You can see that, right? Just down, and then look, this is a doji and overextend. That just means that it is starting to make an indecision, and we're on this pivot. You can play it to the upside, right? And on the 5-minute, it's easier, right? This is a 2 down, 2 up reversal. And then the next one was going to be your 2 up, 2 up continuation. Let's say you didn't get in, let's say you got out here for your shorts and you were not confident because you didn't know where price is going. You didn't want to play longs, right? And you missed this whole entire movement here, right? And then it came back down and you're like, oh man, it's going to go short again. Well, here's where you could have gotten in long again, right? So look, we went through the pivot, we broke through it, but false breakout, came back in, and we're sitting in the pivot, right? Well, once we broke out of the pivot on 1035, you could have gotten in on this candle, or you could have waited. Here's the thing, right? Around 1030, the EMA cloud started flipping and reversing, right? The bottom right here is 8. It started crossing 21, and eventually crossed the 34 around 1035. So if you didn't want to get in on this 1035, you could have gotten in 1040, right? Because now the clouds are bullish. We broke above the intraday pivot. And this teal line is also the 50-day moving average on the 5-minute. So that was your confirmation to get in. And then how you would trade this is that you would play it up to the gap, right? I always talk about you need to play it to a certain price zone. And here's another thing, right? This is the day high, right? Once we broke through this, that was our 2 up. So now we made it 2 up. Now we're going to see a little consolidation, and then we continue further up. And the reason why you wouldn't get on this trade is because, one, you would have set your stops somewhere in between here and never triggered. 2, all this is doing right now, because it's overextended, is pulling back to the clouds. And look, the clouds are bullish now. And also the fact that you're riding the clouds, right? I always tell you to ride the clouds up until otherwise given, right? So once we hit this gap zone, that's where you could have been, okay, I might get out. And look, even if you got in late, meaning that you didn't get in all at the bottom, if you would got out around the gap, that's still a $1.54 move, right? That's still huge in terms of your premium. And the reason why you would keep staying on this is because, one, it just kept going up and never broke the clouds. And eventually, once we hit this intraday pivot here, that's where you might start being a little bit cautious of your positions and manage it more tightly. And then the other thing is, look, again, clouds never turn bearish, right? As long as it doesn't break through the clouds on the 5 or 10 minutes, you usually stay in that trade. That's how you stay into the trade a little bit longer. And I've explained this many times to the community that that's how we trade, using the cloud system. And then once we broke through the weekly high, we're golden. Now we made a 2 up day, we made a 2 up week, and at this point, you already knew this was a trend day, right? I mean, the fact that we came down and we just made this massive move up, right? I mean, if you would have caught the bottom, you know, you at this point, you would have made already a 4-point move. That is usually what SPY moves in a daily range. So with that said, you could just kept riding cloud. And how do we know to short it here at the top? One is because look, we made pretty much, by the time we got up here, we made a 6-point move. That's like FOMC days, right? That's what happens. But we also knew, because this was a top side pivot, and we just recently broke the monthly high. So we made a 2 up day, 2 up week, and then a 2 up month. This is the first day of the month, and we made a 2 up month already, right? And I tweeted out saying, hey, we're going to quickly make a 2 up month, but the question is it going to be a failed 2 up? And once we hit this, zone, there's liquidity up here. I mean, this is where people put their stops at the monthly, and there's going to be a lot of liquidity up here waiting to be filled, and it was filled and pushed down. But this is also the top side pivot. And again, this is pretty much close to the end of the day. We have made just a massive run up. There's going to be some profit taking. There's going to be some sell off, and we already expected it. And again, it could not break this anymore. And our key was this. We knew there was exhaustion, hit the top side pivot, but this was a bearish engulfing candle, which means it's an outside bar. So let's say you didn't take it here. Well, you could have taken it on this, and it came back down below the monthly high, which was our failed 2 up month for the time being. Doesn't mean that it's going to be a failed 2 up month for the entire month of June. We just started day 1. And that's how we knew to pull it in. And if, let's say, you just didn't feel comfortable getting in at any of these, right? What you knew, when you knew to get in, it was basically at 3:30. Why? One, we broke through the clouds at 3:25, but then we, pulled back in. Could not break above the 21 EMA. The 8 EMA crossed to 21, and it started turning bearish. So you could have gotten in right here. That was your confirmation right there at 3:30. And also we had 3 bearish candles, right? 3 black crows is what they call it, and 3 nice candles, bearish candles. So that's why we knew to go downside. And then you could have gotten in here, right? So that would have been a $1.10 move. Again, just little things like this, and that's just looking at the 5-minute, right? I'm positive if we change it to a different time frame, you'll see something different, right? 10 minutes. How do we know? Top side pivot. Look, this is inverted hammer. That just means that sellers are here. They came up. It's a red bearish inverted hammer, right? That just means, okay, directional move to the downside, right? You didn't want to get in this one. You get in on the break of this one, right? So that's saying, again, on a different time frame, we see a little bit different stories, right? And this became a bearish engulfing on the 15 minutes. So, if you didn't get it on this, 3:15, you got in the 3:30. Again, we talked about that 3:30. And same thing with the 30-minute, right? This is a failed 2 up on 30 minutes. So you didn't get in here. You could get in again, 3:30. Yeah, it got bought back up, but you still had a chance to get in and then come down and get bought back up. So again, just looking at different time frames show you a little bit different things, and that's how you can get into trades and whatnot. So that's just a quick little high level overview. We're not going in detail and talking about volume, order flow, and all this stuff. But the point is, look, we called this move today. I called this move today, right? Told you it was going to go down. Told you, pretty almost called to the bottom to the cents, and then we called the move up. Was not expecting a power move up to the top side pivot. Was thinking that the gap or this intraday pivot here was going to be the last place, and then it would stall out. But you know what? If we got more, we'll take it. Anyway, hopefully you found this video useful and entertaining. Hit that like, hit that subscribe, follow Twitter, Stocks at the Dark. Thank you for your support. Love you guys. Bye.